All right, good morning. Let's get rolling here. So this was pretty wild. And the way things came down, went back up, and I started talking about that earlier. And, you know, it's frustrating to not have personally, I say, capitalized on this drop here. Um, As I explained in newsletters and here, the misalignment of multiple timeframes just made it very confusing. However, while this was one of the scenarios, it wasn't the one that I was beginning to bet on, meaning I wanted the daily chart to actually follow through, meaning based on the internals that initially set up, the seasonality of the end of the year and Thanksgiving holiday and all that. And this may actually be setting up based on the weekly time frame, which we'll take a look at, perfectly for an end of year rally, since the weekly time frames would set up. We're going to need a reversal in the way things are moving now. They certainly look like they're going down there. So do we short here? Would a gigantic stop? I'm not sure yet. With the anticipation of prices going down to that low, which seems inevitable here. I mean, looking at the chart, which, these Dow futures here, it's like historically, buyers don't show up until prices reach the prior low. And what we have going on here is a measured move. And this is the typical pattern when prices retrace this far like that, is that you get a measured move. And it just, for whatever reason, works out that way, that it just goes down to the next support. I suppose, this little shelf right there is where it stalled. But that was a powerful reversal that it happened last Thursday. And, as we finally call them the idiots, the option traders that have the worst possible timing imaginable historically, they just loaded up with put options right there. The ticks went to an extreme, and we had that really powerful reversal where prices penetrated deeply into that prior red bar. And, in Monday's commentary I wrote, it's a little worrisome that it didn't get further than that on Friday. And, well, yesterday could have followed through higher. Obviously, it didn't. One of the things that I wrote about in Monday's letter was the angle of retracement here. So there was a lot of conflicting information. And in putting this into the context of, okay, this is one piece of information, there was this monster rally, the power. And this was obviously just in the Dow that took that out. So yesterday, what happened? As things started to sell off, could they turn? How deep would they go into here? The idiots start buying calls. I was like, and I said to everybody in the room, I said, this isn't a good sign. So we'll see. And ideally, prices will come down here, and that is where they will load up on put options again. And I imagine that there'll probably be a tick extreme right at the open. So we'll see if we get any little bit of a bounce from there. But historically, tick extremes at the open are confirmation of the selling there. And while there's often a bounce, it will often follow through. So even lower. Let me get this back here. So here are the prior lows down here, and I've got two lines. This was initial, area where it chopped around and then started that rally, and that was the bottom tail down there. So historically, it goes all the way down there. But let's just take a look at this weekly time frame, and we'll take a look at it on the others as well. And let's do it over here so we have the candles. So originally, when prices started on the way down, looking for a W bottom at that time on the daily time frame, that didn't materialize. Prices continued to go down. So with this pattern, it does suggest a W type of a bottom here. So there's a lot of support here. The next support level is down here. It certainly could break below the low. A lot of times it'll do that. You get a little peekaboo down below the low, and then the reversal starts. But and again, assuming that we do get that pattern, that's all we can do is make assumptions based on what the trend is in the moment and where support and resistance is, and then wait to see if we get a price pattern confirmation to trade it. So we shouldn't think beyond what is right now. And these two levels of support is where the buyers historically would show up in any market environment, because support and resistance, supply demand is what moves the market. And those are the technical reference points that we have right now to focus on. So we'll see how that all plays out. Let's take a look at the, thanks, Dan, the S&Ps. And you can see my notes here from the past. This is a good exercise for yourselves, marking up your charts. I used to do this with a pencil and printing out charts on paper and marking them up and keeping them in a folder. I don't do that so much today. With computer technology and the platforms being able to do what they do today, but it's a great exercise to consider marking up your charts with different patterns.
Greg, I think that's a fantastic subject for you, just to do a 5-minute, video showing that exact chart right there. That's a marvelous lesson right there.
Yeah. I know things kind of come out in the moment, as to the things that we do, even for ourselves. And, while I can show something like this, I think part of the value is me communicating to you that it's something that I've been doing for like 30 years. So why? Because I've also been through the complacency period of time along the path where it seemed so easy to make money, because everything was, not everything, but the majority of things were trending in multiple time frames. And I was like, all I have to do is sit down on my computer and make money today. And then things begin to change, and it's like, hey, you weren't ready for that. And so it becomes part of the factory work to review, mark things up, and take note of changes. Yeah, excellent thing to do, Cliff. And printing them out, you can keep them in an electronic folder, printing some stuff out. Sometimes you're just not at the computer. You pull out that folder and just start flipping through stuff. I did that for years. And it's like, I didn't see that when I marked up that piece of paper before. Why didn't I see it? And I'd mark that down, and, it's just repetition, going over it and over and over again. Just this, when you talk about unconscious competence, you hear that being thrown around as part of the learning process and time. How do you get there? By repeating what you do over and over and over again through practice. That just makes it that way. It doesn't just all of a sudden happen. It takes a long time of just doing for it to get to that point. Anyway, you can see how this is setting up now to retest this area down here, whether it'll be this low or into this area where the lows of the year are. We don't know. We'll just see how it plays out. Just continues to be weak here. Let's go back to the 60. And you can see it's beginning to accelerate. So it would be foolish to short this on the open, as things are beginning to accelerate to the downside here. But it's actually a good sign that it is starting to do that, but it's a little ways off before it's going to get to support. So makes it very difficult. And this wasn't an easy pattern after that reversal, and then to just see it flip right back to the downside again. How does it influence your opinion about the whole market? About the Qs? Well, well, it's coming to this support here. And, so, I mean, the extreme is down here. It suggests look, it's an area. It suggests it's going to go lower. Is it going to stop here? Is it going to stop here? Is it going to stop down here? None of us know. And that's why we look at different markets and get the reference points of those markets, and set alerts at them and tick extremes. And, our friends, the idiots, are they loading up on puts? And when it gets down to that area, because that's what they'll typically do. Yesterday they were buying calls, and it was like, what the hell going on over here with these people? Don't they see the markets going down? And that was the tell that it probably wasn't going to turn around. So now, as this going down, I look at this, I don't know where this will end today. It's only 312. So assuming a negative day, can this go all the way down here? I hope so. I hope it's just a gigantic rout today down there. A bar like this closing this way would suggest another down day from there. So clearly this is a big correction. And, well, we can just kind of, what is the extent of this correction potentially, percentage-wise? Let's go here. I think if down here would be 17% all the way back down to the lows, just short of the official bear market, right? As if that really makes all that much difference with a drop like this in a relatively short period of time. So, again, we don't know whether it's coming down here, or whether it's going to keep going, right? We don't know. But you can see I've got my reference points lined up with alerts on those lines. I don't know. I'm not thinking it's going down there, because we got to get through this area first. So, and of course, we go out to the higher time frames. That's what we do. Is that time frame broken? This measured move probably puts it a little bit below there, looking at it from the weekly time frame. So we can just do this. We kind of go with the measured move type of scenario. And I just eyeball these and then just drag it to there. And it puts it a little bit below that low, which looks like it would put it right in alignment with that low right there. And then that would make it probably, well, not quite 20%, but let's say close enough for government work, as they say. 19% down to that low. So we'll see how it all plays out. S&Ps, again, the weekly chart is our guide as to the potential for a W type of a bottom here. Certainly looks like it's headed that way. You can see the hourly is accelerating. Let's go to the 5-minute. Really no stabilization. So some fear here for sure, and certainty about the direction at this time versus the chopping around type of situation, which, there's some confidence here. Obviously, the internals got to the extreme. It had bounced big on last Thursday. It couldn't get that far, and that was it. And so now the assumption is it's coming down into this area here. Bonds are up here, and they pushed above these highs. So a lot of times they do move inverse when the markets are going down like that. The old flight to quality, as it's said. Oil, not much of a bounce for another red bar, but this is a dangerous pattern to short after such a drop in a wide range bar and a little tiny move like that. So just be careful if you're thinking about shorting here. We're so close to a prior low. A lot of times it'll just peekaboo underneath it and turn right back up in your face. Gold pushing up into this area of resistance there. And as you can see, there's a lot of red here this morning. Apple's starting to turn. Amazon down, wow, 70 points. So a lot of selling. And I wouldn't say it's climactic yet because it's not near support. So let's wait and see if it can get turned around. Facebook. And we will be looking for Dan to find us that moment in time where those premiums in those indices are ridiculous to sell them, right? Do I think it's better to short rallies and buy dips in this market? That is proven to be the case, Alex. Now, as it's accelerating lower, it's not near support yet, so that does still make sense. But as prices accelerate lower, the void above becomes rather large. So my playbook says shorting a rally, if we really need a double top and an M type of top where it creates resistance, because typically when it drops like this, it's not going to rally up to minor resistance. So it has to create resistance. So we'll be looking for M tops to short. And the assumption is it's going lower to that support below on the weekly time frame, unless some type of miracle reversal happens. Right? That's the way we have to look at it. We look at historical patterns, and that's what they are. So we can't think beyond what we know to be the case, but we have tools like bar by bar analysis and trend analysis and such to tell us if something different is going to happen. So that's what we'll be doing in here. Okay. All yours, Dan.
All right, thanks. Good morning. Yeah, we were doing a market review after the market yesterday, and I said best case scenario maybe stabilization day, but everything looked lower. The way we closed daily, weekly, and these monthlies are cracked. So are these trade wars going to get real, so to speak? And we do enter a sustainable downtrend. I don't know. We're just looking at the data day by day. Open positions. STI put spread, it seems to be okay. Moss, we have a half lot, ugly close, but that's exactly why we did a half lot with a big stop. We'll be looking to add. CRE, we have a covered call, so at least that's helping. UBNT, covered call, relative strength to the market, but still. VRSK triggered, that's the one. It looked fantastic yesterday. And, in retrospect, should I have sent out an alert to subscribers saying don't take it? I don't know. I didn't take it, but it triggered. I just personally, Greg says playbook, and that's the correct term, trading plan. I wasn't buying anything yesterday, unless it was just a very unique day trade. CMCSA did not trigger, but if it does, it's still fine. I was reading in the journal today how these cable companies are getting whacked from cord cutting subscribers. So they're saying, I'm not paying your expensive cable bills. But look at Verizon. Like surely it's not affecting that chart. Look at that. That's bullish daily, weekly, monthly. Not it's extended, but that's the relative strength award. IWM, we stopped out of our spider. I tightened the stop on those. So those we thankfully got out yesterday. The spiders, IWM is gapping under our stop here. So that's going to be a disaster. Not monster disaster like $10, but it's gapping under our stop. And so I'll watch it. maybe 5-minute low for half, 30-minute low for half. And we got out of our VXX call spread at a beautiful location yesterday. Well, Phil even beat me. Phil got out even better. All right, so that's all opens. Cold, I'm still watching for an entry. Never triggered it. V-cell, still watching for an entry. Let's look at some gappers here because there's a ton of them today. Twilio, 71 bucks, nothing to do. Square, wow, that's a nasty gap. $7 to 56. There's nothing to do. I mean, I need more information. PDD was gapping up, so that was relative strength. Anything gapping up in a weak market, and it's still up to almost $1 here. I don't like the pre-market, but if that's, you know, that's a potential long. Retail getting whacked here with some earnings. TJX under 46 bucks. Now this might set up a gap and snap. That's worth watching. Maybe 30-minute high, sell a Friday put spread. And I think, you know, with volatility high and today's gap down and yesterday's sell-off, we're fine for selling put spreads for Friday. We just need to find the best pattern, of course, and the best premium. Rost earnings, 80. Wow, that's a clock. All right, that one's gapping way the heck down to this weekly support. I'm going to put that in a window because it had earnings. I don't know if TJX did or if it's just going down in sympathy, as they say. Target here, I know, had earnings. These things are getting, wow, look at 68 bucks here on the weekly. Okay, it's gapping to that support level. I would like it better if it were gapping to this next level here. But I'm going to put that in a window. MDT, you know, these are earnings gapping up. It's a bullish pre-market with a price void. So for a day trade, it's surely not a swing pattern, but this is a beautiful 15-minute chart for a day trade long. You had a climactic buy setup, you had a breakdown failure here, you had a retest, and then I was into the close, and then it gap down pre-market to make kind of a big W retest, and now it's breaking out. So that's my best looking day trade only. LOW getting clocked. Here's 85 bucks on the weekly. Wow, there's some pain here today. KSS 63 bucks. I'm gonna have to wait 30 minutes to see what happens on these. This was incredible relative strength for the past couple weeks. Now it's gapping down 42.50 way down here. I don't know what to do with that. Campbell's Soup, 40 bucks, bullish gap but resistance. BBY, 61 bucks. It's just a continuation weakness. ADI, very sloppy intraday and no pattern. I got zero interest on that. Urban was up pre-market. Now it's giving it all up and there's no pattern. Lima Bravo, 31.20. Gapping way down here, but not quality. Jack, nothing. Garbage. Intuit, 198. No pattern. Brooks, 24.50. That's a bearish gap. Let's see what happens. Alpha, light volume here, but bullish gap if it's real and volume kicks in. That's a bullish gap for a put spread. PHM, Alex gave us yesterday. It would be over the high, still looks fine. Cold, I said I'm looking for a pullback. JD was an ugly breakdown yesterday. Oh, and there was an article in the journal today. I didn't read it because I don't care. But the headline was, JD's up on positive earnings. I don't know who came up with that headline. AMAT, we're watching as a 1, 2, 3 over the highs, and it's still we don't want it to go more than 50% here. So that's still worth keeping an eye on. XOM, some of these oils, APC, Oxy. I'm going to leave them on the list. CMCSA, we already talked about. Trip didn't trigger. I canceled it. Team didn't trigger. That looks horrible. IYT. I left as a valid trade. That's still bullish consolidation. There's no volume pre-market, so that's really meaningless. But if it opens ugly, I'll go ahead and cancel it. But if for some strange reason, which I say is highly, highly unlikely, that it opens flat,